Over 500,000 at risk of mortgage stress. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Over 500,000 at risk of mortgage stress. Let's look at this latest data from Roy Morgan, everyone. I think you'll find this quite interesting. Before we jump through this, I just want to bring up this quote, or this definition for you all, of housing stress. It's typically described as lower income households that spend more than 30% of their gross income on housing costs. So if you've got a mortgage, well, that's your housing costs. That would put you into mortgage stress. Now, here's the thing. It's lower income. Now, what's lower income in Australia, guys? Well, let's have a look at this. $433 a week for low income. Okay? So, how many of those people do you think are on mortgages, or how many of them are not on mortgages or not at risk? Let's look at this data because this is an interesting one. You've got a whole number of people at risk, but it's actually getting lower, everyone. Mortgage stress at record lows during the 2021 lockdowns in New South Wales, Victoria, and the ACT. New research from Roy Morgan shows an estimated 584,000 mortgage holders, 15.8%, were at risk of mortgage stress in the 3 months to September 2021. This period encompasses the recent lockdowns in New South Wales, Victoria, and the ACT, which finally ended during the month of October. Mortgage stress dropped to record lows during this period, with fewer than 600,000 mortgage holders considered at risk for the first time. Record lows, guys. The level of mortgage stress is down on a year ago during Victoria's long second lockdown, with an estimated 668,000 mortgage holders, 18.3%, were considered at risk. The low rate of at-risk mortgages during this period continues the trend seen during the pandemic, in which record low interest rates, there you go, record levels of government financial support, there you go, and considerable measures taken by the banks and financial institutions to support borrowers in financial distress have combined to lower mortgage stress to record lows. Mortgage stress today is at less than half the level it was during the GFC in 2008, when it reached 35.6% of mortgage holders. So we're sitting at less than half of the GFC levels of mortgage stress. What does that tell you about the market, guys? Housing is just going crazy, going to the moon. There's predictions of, a fall in 2023, a correction. After this year's insane growth, next year's growth. Mortgage stress is at half of the GFC levels. Although the level of financial support provided by governments, banks, and financial institutions is not at the same level as that provided during the nationwide lockdowns of 2020, it is measured in the tens of billions of dollars. Since June 2021, Services Australia has paid out $11.9 billion to Australians as part of the COVID-19 disaster payment. And data released by APRA shows that as of September 30, 2021, mortgages to the value of $11.5 billion were deferred during the most recent lockdowns. Okay, $11.5 billion. Let me just bring up. So here we have the loans subject to deferral. And this was over $250 billion at one stage, guys. So $11.5 billion, yeah, we're nowhere near those levels. So mortgage stress, owner-occupier mortgage holders. We can see here, look at that. The height at GFC was 35.6. So that's at risk and then extremely at risk. So does that mean, are they actually at mortgage stress? Yes. And remember, this is only when you need to spend 30% of your income on your households and you're considered at risk. I wonder if that's an outdated metric. Because if you're paying an insane amount of rent, you're managing to cobble together a deposit, you still may be better off. And that just means you're at risk of stress. That doesn't mean you're at risk of defaulting. It means you can find ways to keep it going. Here's the thing. This is why we have to be careful when we see these articles or the way that this is presented by the media, because negative news gets the views, everyone. The doomers get the clicks. People want to see it. And you've got so many people desperate to get into housing here in Australia. They want a correction. They're desperate for it. They think it's their only opportunity to get in, which it feels like it. So, Roy Morgan has also tracked the impact of COVID-19 on the employment situations of Australia. in May 2020, 11.2 million working Australians, 72%, reported a change to their employment circumstances because of COVID-19. And in September 21, during the recent lockdowns in Melbourne and Sydney, there were still over 11 million reporting their employment status had changed. Many of these employment changes are negative and included having to work reduced hours, not having any work offered, having been stood down for a period, businesses slowed or stopped completely, had pay reduced for the same number of working hours, or been made redundant. For Australians, the negative employment changes due to COVID-19 mortgage stress is higher, with 18.7% now in mortgage stress, almost 3 points higher than for all mortgage holders. In addition, around 1 in 8, 12.4%, are extremely at risk. So here's Australians with negative employment change. They're higher than everyone 14 plus. So, well, that's not surprising. Of course, if you lose your employment, if you lose your hours, if you get impacted in your employment, of course you're going to be at risk of mortgage stress. So how are mortgage holders considered at risk or extremely at risk determined? Roy Morgan considers the risk of mortgage stress among mortgage holders in two ways. Mortgage holders are considered at risk if their mortgage repayments are greater than a certain percentage of household income, depending on income and spending. They're considered extremely at risk if even the interest only is over a certain proportion of household income. At risk is based on those paying more than a certain proportion of after-tax household income, 25 to 45%, depending on income and spending, into their home loan, based on the appropriate standard variable rate mortgage by the RBA. Extremely at risk is also based on those paying more than a certain portion of the home loan. Okay. A near record low of only 15.8% of mortgage holders were at risk in September 21 as mortgage stress plummeted during 2020. There you go. In the 3 months to September 2021, only 15.8% of mortgage holders were at risk, which is down significantly on a year ago during Victoria's long second lockdown. In the 3 months to September 2020, there were 668,000 mortgage holders at risk, the low point for 2020. The number of mortgage holders at risk increased from the low point a year ago as financial support was gradually withdrawn and peaked at over 800,000 over the summer months when the Northern Beaches area of Sydney was well placed into a 3-week lockdown, and there was concerns that the whole city will be placed into an extended lockdown. After peaking in the 3 months to January 2021, the number of mortgage holders considered at risk has dropped consistently during 2021 as strong employment growth led to a record number of over 13 million Australians employed for the first time in mid-2021. This compares to total employment of under 12 million in March and April 2020 at the start of the pandemic. Almost two-thirds of at-risk mortgage holders are considered extremely at risk. Of the mortgage holders considered at risk in the 3 months to September 2021, almost two-thirds, 357,000 or 10.3% of all mortgage holders were considered extremely at risk. This is down from 388,000 mortgage holders extremely at risk a year ago in the 3 months to September 2020. The trend of mortgage holders considered extremely at risk has followed a similar trend to the larger group considered at risk since the pandemic began. There was an initial spike in mortgage holders considered extremely at risk during the early period of the pandemic before extensive government support and mortgage holidays for those in financial distress kicked in to support the economy. The number of mortgage holders considered extremely at risk increased towards the end of 2020 as financial support to the economy was withdrawn and peaked at 526,000 in the 3 months to January 2021. The strong employment growth during the first half of 2021, record low interest rates and significant financial support from government and banks during the recent lockdowns have all contributed to lowering the number of mortgage holders considered extremely at risk to record lows. So what do you think, everyone? Well, let's have a bit of a talk about this. So, less people are at risk. Less people are at stress. More people are doing better off. It's improving. I don't think we're going to see a huge fall in property, guys. We're going to see a correction, but it's just going crazy and insane. And now the precedent has been set for government intervention. Let's watch this next election. Let's see what happens, everyone. Thanks for watching. Check out this last video I did, as you know, about CBA's predictions of a 10% fall in property prices. I wonder if that will affect the number of people at risk. Take care, guys, and I'll see you next time.